Good morning, everyone, and welcome to the European crossover webinar. And we're actually last day of the week, and I was having some problems pulling up my Reuters. It did finally come up. It was stuck, and I tried to shut it down. It still wouldn't shut down. It finally popped up by its own. But anyway, nonetheless, so sorry for the delay on the opening. Let's go and take a look at the euro. And I did want to go and talk about, well, of course, Bitcoin, but also indices, where we're at, and what we were referencing yesterday and where we're at today in regards to specifically the NQ, but I guess it'll be the same thing also with S&P. So let's just take a quick overview. This is a bit of a surprise here. Look, we're still pushing up higher here. Now, we did get past the ECB, so and actually it's really within well, we have the resistance, but nonetheless, we're still pushing higher right now here in the euro. And then the cable, I mean, sheesh. This thing was a bit of a surprise here, but we did maintain the resistance from yesterday, which is, I believe it's 30, let's see, it was 37.62. So we got up to, well, we never did even challenge yesterday's high. Came close, but 37.62 is actually a weekly level. If we were to go back, there's actually a wick, so 37.62. So we're paring back a bit here with the cable. Take a look at the Aussie dollar. A bit weaker here, not much, not very much of a change. The Kiwi actually responded pretty well here from the last couple of days. But we came right into this resistance level, which is our bias chart resistance, and you can see why. And the market stopped in its tracks, and it looks like we just tagged it in the Asian session here, and now we've pared back a bit. Take a look at the CAD, which we did actually see a reversal yesterday. See this mini hammer and a little bit of follow through here. And guess where the resistance is? You got it right there, that level. Looks like we just tagged that right now. Dollar peso, this thing has been so in the dumps. It actually, we had our resistance, our bias chart support at 1853. It held, I think the low was like 1854. Looks like it was 55, but no, I think, yeah, 54.2, and our bias chart support was 1853. So it's held and we've rebounded. We actually came into, I think 1883 is our bias chart support resistance for today. And let's take a look at the dollar yen. This has been going nowhere. We did adjust our levels from yesterday. I mean, coming into yesterday, but nothing's really changed here in the dollar yen. And then lastly, the dollar index was under some pressure in Asia. We've come down here. Our bias chart support yesterday was 902, and the low was, I guess, we finished on our lows, so I guess at 90.03. We've opened the door a little bit lower, but it's actually holding up. So with that being said, let's go on and take a look at the indices. So bear with me. Oh, let me go and pull up, like I said, the Reuters finally came up, but what I couldn't get it, the economic data. Let's click on that. Come on, okay. But I don't know why Reuters was stuck. It didn't want to come up. But anyway, let's take a look where we stand right now. Apologies there. I hope I didn't mess up my... You see, it did mess it up. You see how everything's all... These are countries that... Who the heck is this country? Thailand. You see, it did mess it up. Doggone. I have to go on and go through this to clear all these junk countries. Doggone it. Hang on. You see, so stupid. Anyway, let's take a look. It's really frustrating. Okay, so for today's data, we did have flash PMI, French flash PMI. You can see here, and you can see it's all messed up. None of the Reuters poll is here. Now it's including all these crazy countries, Sweden, Brazil, and that's what I have it. So that's going to take me a lot of work to push everything out. But anyway, that's why I couldn't get this thing. That didn't want to. It was stuck when I was trying to come on earlier. But anyway, nonetheless, was probably freaking Uzbekistan or something, Taiwan. Anyway, so we did get flash PMIs for France. You can see now all the Reuters polls are all missing, so I guess it really did mess up when I tried to load it this morning. Anyway, German flash PMI. See no comparison for the poll. 57, and it's really frustrating. And Eurozone flash PMI came in at 54.7. Like I said, I don't have a poll. I guess it really messed it. When it was loaded, it really screwed things up. So we do get at the bottom of the hour UK flash PMI. And you see, that's why I added all this junk out. You see, look at this stupid country. Who's that? Kuwait. Anyway, so let me go to the bottom. You see, come into today, into the union session, we'll have Canadian retail sales, flash PMI, market composite flash PMI at 9:45 Eastern. Anyway, got a lot of work to do today on that. Fix this Reuters thing. Okay, well, let me go in. Go into the indices. You can see here, we're just a touch weaker here. We actually got above 13,400. I'm talking about the NQ. Now, yesterday, we did see the market going in pair back. Remember, I mentioned I had been short from the Asian session at the time, and we actually did see the market going in pair back. Here, it doesn't look like paired back much, but actually paired back 80 handles, actually more than 80 handles from where we were here. If you looked at it, paired back actually like 95 handles or a little bit more than that. But I've been short formation here. Now we got that dip, but here you can see right here what was key here. Actually, you'll see it right there in the 2-hour chart. We got that dip, but we could not get what I call the break and hold. Break it and hold it, and that would have opened the door. Now, what I was referring to yesterday is, I think Irina was asking me, in reference, was it was open to break yesterday, open for a dip yesterday, and it needed to definitely dip and hold or press into that. Actually, pressing a little bit low here, 1332, in order for us to see some follow through that could carry over through today. Because they said, "Hey, look, good luck trying to sell this thing or get short on a Friday." Now we are dipping a little bit further, but it's been really quiet. Look at it; it's just trading ever so slightly. Look at that. Here we were at 47. I finally dipped a little bit lower. We're holding here. Look, anything's possible on a Friday, but more than likely what they've done is they don't fight it. And so the move has been higher. So it'll be a little bit tough trying to get this market to now go on and roll back. Doesn't mean that we can't. As I mentioned, we had this 161% extension here. And if you run this flag from here, you extend that, it also comes in here. So it's not to say we couldn't dip. It's just that you can see here, even with the market acting a bit tired, it's really fighting it. So you can end up finding yourself dipping here, not find a whole lot of follow through. So we'll see how that goes and plays out. But that's the reason why I thought it was important that we break and hold yesterday, and that would have spooked the market and opened the door for us to move lower here. Now you're here and think about it. After this run, I think we knocked a lot of shorts out, but I'm just saying anybody who was short would love a dip back in here to cover. You see what I'm saying? It's pretty hard to step in. So that's what I'm saying. Had we have come in on Thursday and pressed down here, and we may have finished here, then you'd be thinking, wow, there's probably some longs are saying, I don't want to take a chance. I better just take my gains, and that would have opened the door for us to move, lower. Maybe not a whole lot lower, but maybe could have opened the door for us to move back down to here. You see, up now when you look at that in perspective, now we're way up in here. Yeah, maybe all we do is if we're lucky, if you're short, that we dip back and just challenge these lows. Doesn't mean, like I said, we can't break and hold it. It's just that if you look over the Fridays, especially with the trend that we've had here, the Fridays the market just sticks it to the shorts and just keeps pressing up against her. So you can see here when you look at this, we've had quite the move, and we're still way up in here, way up into the stars. It's just that if we would have dipped here, that would open the door for us to move lower here. We'll take a look at where we are with the S&P. That's actually coming to some support here. You see that? And that has come off a decent amount. If you look at that, we came up to 36.60. We do have, if you look here, we had a gravestone doji here, and the market broke. Right there, but you'd have to go with the support level here. There we go. We did open the door for lower, and like I said, I was thinking about this when I went to bed last night. Mainly about with the NQ though, is the market doesn't expect it. Could we actually break it lower here, and really out of nowhere when you least expect it, the market wants to break? I don't know. We'll take a look at the individual equities, but they did come off their highs a little bit. But once again, it may open the door for us to maybe slide lower in here. So, but we'll see how that happens. We'll see how that happens, but how that plays out. Let's go and take a look at Bitcoin. And you can see here, Bitcoin had a pretty good fall. Wow, that was a decent fall. We made it here, back here to this 29,114. So pretty good little fall, and we did, as I mentioned yesterday, remember we said we came down to this trend line, but the door was open for us to come at least down to here. We've come down to, remember we said 32,228. That would have been the area they were at the time we were here. So they made it down there, and they even ran this market even lower. So that might take a little bit of some risk off, although I'm not thinking that just because Bitcoin is lower, that necessarily portends that it's going to bring down equities. I'm just saying is that obviously the market was spooked a little bit by that. So with that, let's go and take a look at the news. At least we do have the news up, which I mean is frustrating with that economic data counter to work on. Renee says, good morning. She says, right on with the NQ. Yeah, we'll see. And here's the thing. We're still, look at this. We're still working lower here. So, I myself was going to come in like, I did cover my shorts and yesterday, but I was being very cautious on the way back up. I'm glad I was, because you can see the market really made it a little bit tougher. But you can see we're continuing to slide here. So, once again, like I said, could we dip a little bit lower? Actually, if you look in here, we had a great shooting star right here. You see that? Wait a minute, not a shooting star, because that's not, the wick's not long, but nice little gravestone doji on the 30-minute. You can see here we had this one. The market still went higher before we rotated lower, but you can see here it wasn't anything that was dramatic, because you would have looked for this market to maybe do a fast dip, and you look at it here, we have it, and this is a 30-minute chart. We finally broke a little bit lower. We held this level here. You see here. Then we did finally break. That caught some stops. But did we see a big follow through? No, the market's just been sitting here, and we're just testing a little bit lower. So once again, we'll see what happens. Let's go and bring up the news though. Bitcoin heads for the worst weekly loss in months. Bitcoin wavered on Friday and was heading towards its sharpest weekly drops in September as worries over regulation and its frothy rally drove a pullback from the recent record highs. The world's popular crypto's currency fell more than 5% to almost a 3-week low of 28,800 early in the Asian session before steadying near 32,000. You wouldn't want to rationalize too much of the market that has as inefficient and immature as Bitcoin, but certainly there's a reversal in momentum, says Kyle Rhoda, an analyst at IG Markets. The herd has probably looked at this and thought it sounded scary and shocking, and now it's the time to sell. The Bitcoin was trading more than 20% below the record high of 42,000 hit 2 weeks ago, losing ground and growing concerns that it's one of a number of price bubbles as cryptocurrencies catch regulators' attention. The only thing I will suggest here, and you look here, let's losing ground and growing concerns. This is a number of price bubbles. This is the thing I was referencing here, was that maybe this falling back like that might spook a few people that are trading indices. The same thing is trading like the way they are trading Bitcoin, that we've seen all this euphoria that has pushed these indices to record levels. Is that possibly it does cause a little bit of at the very least a little bit of concern. They think, you know what, maybe I may be a little bit careful. And once again, I don't expect some massive reversal or anything like that, but it might cause some people to pare back a little bit. And especially when you think about, like I said, when we showed that yesterday, when we compared the Fangman stocks and say, wow, I mean, they're not at record highs. I mean, we did see Apple push towards its old highs, but I'm just saying, is the way these indices have gone going higher and higher and higher, makes you question that. But anyway, during the U.S. Senate hearing, Janet Yellen, President Biden's pick to head the Treasury Secretary, expressed concern that cryptocurrencies could be used to finance illegal activities. Well, that's been saying that for a long time. That followed a call last week from ECB President Lagarde for global regulation of Bitcoin. Still, some of the pullback comes with the territory from the asset that is some 700% above the 2020 lows hit of 3850 hit in March. It's a highly volatile piece, said Michael McCarthy. I made extraordinary gains and is doing what Bitcoin does and swinging around. Or he said it made extraordinary gains. Bear with me. So the dollar steadied in a cautious Asian session on Friday, but it's set to log its worst week of the year as investors welcomed the Joe Biden administration by seeking out riskier assets. Against the Japanese yen, the dollar has fallen more than 0.3 this week. The dollar last traded at 21.72 per the euro and 3.54 for the yen. It advanced a little against the Aussie and the New Zealand dollars. Biden's Democratic Party controls the U.S. Congress, seeking to borrow and spend to support the economy. The anticipation of the stimulus has driven equities to record highs. Central banks from Tokyo, Frankfurt, Ottawa, and Oslo have also this week left policy settings untouched and began cautiously to talk about recovery prospects. The underlying driver of the Aussie, Kiwi, and Canadian dollar strength is that their central banks will not be able to keep policy rates at current levels in a global recovery. The Canadian dollar slipped to 26.71 per dollar with a dip in oil prices on Friday. Sterling eased from Thursday's 2.5-year peak of 37.07. The dollar's losses this week might call the time on the bounce and has carried the dollar index above 1% above the 3-year trough, and it touched the first trading week of 2021. The index was flat on Friday at 90.11 and 7/10 lower for the week. Forecasts of dollar's weakness are widely held. We believe the U.S. economy recovers in a risk-positive environment. The balance of payments could become less supportive of the dollar. They added, especially if Biden lifts taxes and global investment flows head elsewhere in response. However, the stronger than expected inflation in New Zealand sent the yield of the 10-year government bonds to a 9-month high, prompting Kiwi Bank to follow Westpac and drop its forecast to additional rate cuts. So we're going to move into the analysis now. Okay, so the euro closed at 5-day highs on Thursday following the ECB. Resistance on Friday will be 22.07 with support at 21.13. Well, we haven't even made it up to 22 yet. So I put it for 22.07. With support at, and I didn't put the support at, but I don't know why I didn't, but I know I meant for it to be at 20.96. So hang on. I remember that on the analysis. Let's go move into the cable. Cable closed at new highs on Thursday. Friday's resistance will be 37.61 with support at 36.23. We're dipping back a little bit here. And let's go into the Aussie dollar. So the Aussie closed higher on Thursday in a very tight range. Resistance will continue to remain 77.72 with support at 76.95. On to the Kiwi. So the Kiwi rallied to the bias chart of 72.26. There's that level we referenced earlier. Resistance will be 72.39 with support at 71.42. Onto the dollar CAD. Well, the NQ is still pushing a little bit lower, a little bit. It just dipped to 33.21.50 right now. So they're trying to dip a little bit lower. The dollar CAD took out 26 before recovering to post a minor hammer bottom. Support on Friday will be Thursday's low of 25.89 with resistance at 26.85. We're actually above 26.85 right now. You see that level right there? We'll go right there, which is 26. Actually, it's 26.98. Call it 26.97. We'll go with the level. Actually, there's our level. Yeah, there it is right there, 26.96. So the only difference is 1 pip higher. There. And 25.89. Onto the dollar peso. The dollar peso held bias chart support at 1953 before closing it at 1970. Support on Friday would be 1960 with resistance at 1983. Well, you can see we're pressing right here. We've actually gone a little bit higher past that 1983. But well, let me see, we've been up as high as 1990. You see these wicks right here coming across? They're at 1988. So we'll just go with that to 1988. and support at 1960. Onto the dollar yen. Oh, no changes here in the dollar yen. I remember marking that. No changes. So dollar yen 329, upside 389. So no changes. Onto the cash dollar index. So the dollar index finished at the lows on Friday. Support on Friday finished at the lows of the day on Thursday. Support on Friday will be 89.80. With resistance at 90.45. On to the cross rates. And the NQ still touching a little bit lower. It's at 33.19 now. Like I said, just dripping a little bit lower. Now, the key is going to be whether they go after those lows of 32.89. We did, and I will say that we did get a sell signal. I did see that in Asia. We did get a sell signal on the 30-minute, and we're just gently pushing a little bit lower. Now, will we see a quick little cascade tomorrow? That we'll see about that. Let me just go there just to show you where we are. So you can see here, we're right into support here, but we did get the sell signal. I usually like to highlight them so they stands out. Now this is key because if you look here, yesterday it looked like we could get that drop. You see here, and we came here and we did not generate the sell signal. You look at it. Look how long we've been on a buy right here. And we look yesterday, it looked like when we got that dip, look, we might get a sell signal, and we finally got it here, and it's just been dripping lower. Let's go back to the analysis. Look at the Kiwi Yen. We had a high of 74.72 is what we're looking at, and yesterday's high was 74.77. We'll keep that in check. This market hasn't gone anywhere, so it's going to stay the same. No changes here. The high yesterday was 74.77, so that wasn't too bad here. And support for today is going to be 74.05. Let's go on to the Euro Pound. This one was something else, but we've actually turned things around here. So we did take that dip. The support, we were looking for 88.15 yesterday, and the low was 88.29. We got a hammer bottom. So the resistance is going to be just the wick, the high for the week, which is right there, 89.23. And support, they did break away here. This is the key support. I don't know if we're going to come back here, but that'll be that key weekly level, 88.75. I guess put it this way, if you were to get long, you know where your stop would be, just below that weekly level. Going on to the Euro Odd. Oh, nice little tweezer here. That would actually be like a weekly tweezer because look here, Friday, Thursday, Wednesday, Tuesday, Monday. That's it. So yeah, it would be a nice little tweezer low. So support now would be right there. Actually, you can even get a little bit right there. This wick here, that's going to be support, 56.73. Resistance right there, the close right there, which is 57.95. On to the Euro Kiwi. Same thing here. We took out the lows by just a hair, and it actually held that level at 68. See there? And we moved up higher. Support now is going to be that open right there, bar, which is 68.53. And resistance is going to be this close right here. You see there? Right there, which would be 69.53. On to the ASEAN. No changes. Look how tight that range is. So there's no changes here in the ASEAN. We had 80.48 and the high yesterday was 80.51. So not bad, but it's a tight range. On to the guppy. No, we're still within this range here. Our high was for 42.32. And you can see that was posted in actually from a couple of days prior. So that'll remain the same, and the support's going to remain the same, 41.34. Onto the sterling odd. Trying to get things turned around a little bit here. Resistance is 77.09. That's going to hold, or at least that's what we're looking at. And support on the downside, we had 75.79. And that'll be fine too. I don't think we're going to turn around and sell off here. The only thing is, if you want to tighten it up, it'd be right there with that wick and that open, which would actually be 76.16. And that'll do it for the buys chart. Now we'll take a look here because we're saying, hey, will we get could we see a follow through? That's why I was so concerned that, as I mentioned earlier, why I wanted to see that break yesterday, because then you could have driven some momentum into today. Now, we're still up in the stars. So are people going to pile in now? Like I said, anything's possible, but the momentum, the percentage move is not in that favor. Doesn't mean we'll go back to the indice and then we'll look at Fangman, which has not been calling it at all. So that's what I'm saying. You have to take everything with a grain of salt. But like I said, that's why I wanted to see this break yesterday. You see here, we would have got that exponential moving average signal here. And then my thoughts were, okay, we can close around, let's say down here. That would spook the market, and then we could see some follow through potentially to here. And that was not to be the case. You see what I'm saying? That's what I thought, okay, maybe this market would have said, wow, maybe we could eventually come down here to 30.50, and with the close that we would have seen would have put us in here, would have given us some pressure. So right now, you're like, okay, it's Friday. I don't want to carry any positions over the weekend. Let me just go and short the market right now. That's what I'm saying. It's just, you don't have the odds, and why I was so forceful about this market needing to break yesterday, because we could have seen some follow through momentum. Now it's like, okay, if I come in short, let's see if you can come in short here. You don't know if the market's going to break. You don't have a lot to play with, because if the market starts to go against you, you got to get out. You see what I'm saying? So we'll see how things play out. It just, anything can go and happen. Obviously, if we were to see a sell-off, then you could maybe see that carry into this next week. Bitcoin did break lower, so maybe a little bit of this excess might be starting to it's not starting to ring it out. I'm just saying maybe start to temper things. People might start to say, could we see a little bit risk off come off? We'll see. But like I said, it was why I was stressing so much that how important it was. If we could have broken yesterday, we could have seen some push, and then we could have seen some follow through on Friday. So let's go back to Fangman, which I said has not been a good indicator. I pointed that out, why that was the case when we looked at all the dailies that we compared to where the market was. Well, now the you see the reaction in these Fangman stocks, and now the index is now starting to run out of gas. So how do you like that? You see what I'm saying? Now these Fangman, and work at the daily, like I said, all-time highs in NASDAQ, not in Apple. I'm talking about here. All-time highs in NASDAQ, not in Microsoft. All-time highs in NASDAQ, not in Amazon. $350 lower. Yes, in Google, but you can see here a little bit of a Gravestone Doji yesterday's close. Same thing with Nvidia. Same thing with Facebook. So that's what I'm saying is it's been frustrating because the market was trading really well. I could just look at the FangMan, but as I said, the Nasdaq had spread it out. Its rally, which is in a medium term or longer term outlook, is actually more positive. But now these idiots, now they rally, and now look at the index. The index is running out of gas now, and maybe not running out of gas, but you're not seeing. You would have thought now that they joined the party. You can see here. Let's say that they joined the party. Now the index doesn't. Now the index it doesn't feel like rallying anymore. I'm saying is if you think how far the index rallied without the participation of these guys, and they have the heaviest weight, you'd have thought, wow. Look how these pushed up here. Wow, the NASDAQ must have added at least another 300 points. At least that. Maybe we added 400 points. And you look like, wait a minute, it's stalled. And right now we're on our lows at 33.15. So that's what I'm saying is we did see these markets. You can see here, close here. Google has posted a little bit of a Greystone Doji here. And NQ still pushing a little bit lower here at 33.12. But we're right into that support right there. We'll take a look at the Tesla. You can see that's still holding up close to its highs. Netflix, a bit of a pullback. And we can take a look at the pandemic plays. Go to eBay. Still holding up. See right there. Peloton. Still holding it relatively well here also. PayPal. Oh yeah, up at these highs. So you're not seeing anything to suggest this market is spooked. Netflix, as I said, whether we see a break, the key, and we'll move to the NQ. You can see here, we're right there, support. Now, like I said, here was my thought last evening. Is could we see a break on Friday? Anything's possible. The Bitcoin, like I said, it may have tempered a little bit of enthusiasm. So it may have got some people that primarily just trade what they like to refer to as the gamification of equities or indices. Those same traders may be saying, maybe I better rein in my risk a little bit. Okay, so that may open the door for a little bit of a pullback. So could we see a little bit of a pullback? Possibly so, because this may have got people thinking on this break. this may have spooked some people right here. Is when we came in yesterday, I said, okay, well, they're going towards this trend line. That opens the door for them to get down to 32.25, remember? And we were trading up here at the time, this is where we were at when we came in, say 33.05. So that was still an additional $750. And look how far we broke. So that may get people a little bit spooked. And remember, a lot of banks and big funds have actually come into Bitcoin. So this move here, this hard break, and that was a pretty hard break, may have some analysts looking across the board saying, well, could we see a pretty good little dip? And then they may say, you know what? I tell you what, we've had a pretty good run here. Maybe we'll kind of take a little bit more money off the table. And so once again, did we come into a key level? And like I said, I just want to make sure that everybody's on the same page. I don't want anybody saying, I know that someone told me yesterday, kind of was stating that I was like, well, I thought you just meant that maybe it could fall and maybe it could not. I did not say that. I even said I was short yesterday. Bear with me one moment. And if you take this, extend that. You see, so we've come into, you see here, it even comes in confluences with this 161% extension. I would have a lot more confidence if it was off this one. You see this one right here? Look at that. That all-time high, and that was a big, huge fall. Now that one doesn't come till 13553 or 553. If they were there, I'd probably be saying, I don't care, and I'll just get short and I'll just stay short. That's what I'm saying. I go, hey, look, they still have the momentum going with it. But like I said, I do think it's susceptible. I never was thinking that this was, as I refer to as the high. But I think that we could have paired back, and then maybe the market would take eventually one more higher high. But are we susceptible here? Yes. The problem is that it's a Friday, and they've, for lack of a better phrase, they've crushed the shorts every Friday. You show me a Friday where the market sold off. Show me a Friday anywhere where we've sold up, and I would say going back, 3 months or something like that. It just ain't there. Maybe, like I said, going back 3 months, but if you want to show me 2 months, you show me. I'll bet you there's no Fridays that you've seen those sell-offs. They just smacked the shorts, and that's why it was so critical. What I was stating was, and I said it was open to a sell-off yesterday. We did see a little bit of a sell-off. We just didn't see any follow-through. But I said it was important that we got that yesterday in order to see some real momentum for a move down here for today, which would have taken this. Problem is, since we didn't get that, and the market's here, you've seen the market pull back, but it's still way up in here. So if you get, that was my problem, is that if you get short today and the market starts to go against you, you just have to cut, you just have to cover, because chances are we could maybe end up opening up on Monday and we're going higher and you're further in the red. The only thing is, like I said, maybe the Bitcoin might get some people thinking like, wow, you know what, this kind of fell much further than we thought. Could we see a similar move in another asset class? Not that people necessarily consider Bitcoin asset class, but once again, it might get some people thinking, maybe I need to be a little bit careful here and take a little bit of money off the table. We did open it. We do have, once again, this sell-off, not sell-off, I mean self-signal in 30-minute EMA. I wanted it here. It doesn't do me that much good to get one on a Friday. Like I said, when the percentages, like I said, if you pull back on all these Fridays, you show me where a Friday sold off anytime in the recent 3 months. It hasn't happened. So, if you want to be the lone wolf out there and take on the market, go ahead. But I'm saying that the percentages are against you. Like I said, anything can happen on a Friday. Maybe we see it break down a little bit. But once again, you're going against, the percentages if you're trying to sell equities on a Friday. hence my point. So we'll see what happens, but that's the lay of the land right now. But that being said, like I said, we'll get the bias chart posted, and thanks for joining us here on the European crossover webinar. Pedro said if you can take a look at gold, a good level to buy. Well, we talked about gold. We talked about gold extensively this week. I gave those levels, and we even had laid them out. I can even go back here to gold. We said we were here early in the week, and remember, the market already dipped, and we were trading. I think it was at 1829, and I said this market has to defend that 1816 area, which it was at the time. And I said, here's the levels looking up. I go, if we're going to get above, we got to get to here, which was this level right there, which is 1860. And I said, as we moved higher, I said, okay, great. We did hold it. And remember when we came in this day, which was, I guess it was Wednesday, I said, at the time we were trading at 18, we were right at 1859. I go, okay, we're at 1859, but this market, that's fine to defend it, but it's got to get to 1869 to get a little bit more juice. And it did. It finally closed above 1869. And then I said, I think it was this level here. Yeah, it was 1882. I said, watch, you're going to get some selling at actually the body right there, 1882. I said, look, this is where you're going to get a little bit of profit taking. Well, we didn't quite make it there. We got above 1869. The market topped out at 1877, and now we've paired back. But if you're looking for something immediate, it's going to be right there, 1849. We do have a hammer, but this is when you need to buy it. I mean, if you didn't buy it here, I mean, I'm saying is this is, you came into this area, saw, look at it. That was a huge sell-off from 1965. You're talking $150 sell-off. This was the time to buy it, not now. I mean, unless you think the gold's really going to recover. And I'm not sure why you would think gold's going to recover, because we talked about that. You look at it, look how it broke down. That's what I'm saying. This thing really looked terrible. And I said, really, in order to get some momentum, this market needs to get above 1902. Because if you look at the chart, it looks ugly right here. You see here, it breaks down. Okay, we saw a pretty good breakdown. We should have seen this market take off from here, maybe not take off, but continue to move higher. And we broke again. This was imperative. It defended at 1816. We got the hammer. Okay, you got a hammer after you defend it. Now's the time to get long. And now those that got long, at the time when we came on the air, remember we were at 1829. I remember it. So those that got long here, they saw a pretty nice little run up of $40 almost. So now, if you're trying to buy it, the area would be 1833. It needs to defend 1833, but if you're trying to step in, it'd be 1849. But you're really looking at a market that's broken here. I don't see anything that suggests to me that the market is going to go higher. That's what I said is it was great that it defended 1816. I said it needed to get above 1869 to generate some further buying. We did get that, but you won't come out of the jungle. You won't get some people saying, maybe there's something behind this until we get a close above 1902. Okay, with that being said, thanks for joining us here in the European crossover webinar, and we'll see you in the chat room.